Proof of reserves is never proof of solvency. So now we get to the really interesting spot of some of these new systems where a lot of them are excited about Bitcoin season 2, just like you, and I mean, just like me. And so there was a gold rush, but they made some exceptions. So I call this TVL mirroring. And it was really, especially about a year ago, it was all the rage as this Bitcoin season 2 narrative started. And what people do is they say, hey, I want to launch a new product, a new Bitcoin product. I really want to show how big and important my product is. So I need to get a bunch of people to put their money at risk and show how they believe in me. But then the people with money are like, I don't want to do that. I do want to make money on you. And I do think that one day you might do something interesting, but not today. So here's what I'll do. I'll move the money to a wallet that I control, and you can tell everyone that you control it. And actually, it turns out, I don't want to call it an industry standard, but this became a very popular thing.
Welcome back to Bitcoin Season 2. I'm Charlie Spears with Blockspace Media, and I've got Matt Luongo of Thesis with me to talk about the landscape of wrapped, staked, bridged Bitcoin and the cross-chain Bitcoin economy. Before that, I want to thank our sponsor, Arch.network, and invite all the new listeners at CoinDesk. Thanks for tuning in. Make sure to hit up Bitcoin Season 2 at BTCSZN2 on Twitter, and our parent company, Blockspace Media, Blockspace Pod, also on Twitter. So if you're wondering what Bitcoin Season 2 is, join the club. We're kind of figuring it out as we go. Basically, there's been a lot happening on Bitcoin lately, and we're going to cover all of it. It's ordinals, Bitcoin technical debates, layer 2s, everything in between. But before I get too deep, let me bring up Matt. Welcome back to Bitcoin Season 2, Matt.
Hey, Charlie. Thanks for having me.
Yeah, so pretty big week for you guys. Thesis has a bunch of companies under it, one of which is Fold, going public next week. But 10, 15 seconds, who are you? Where do you fit into Bitcoin?
Yeah, that's hard in 15. Hi. Well, originally I was the co-founder of Fold, which is a Bitcoin-backed debit card. They're getting ready to launch a Bitcoin-backed credit card. And they also happen to about to be listed on the NASDAQ. So quite excited for that to happen. But since then, I run a crypto venture studio. And when I say crypto, I run a Bitcoin venture studio. We focus on products that are bring utility to Bitcoin, economic, technical. So one of those is TBTC, which is a Bitcoin bridge. I imagine we'll talk a little bit about an alternative to, it's wrapped. It's another version of wrapped BTC. And then another is Mezzo, which is an upcoming Bitcoin sidechain that I think is going to be a big part of Bitcoin Season 2.
Yeah, and that's why I have you on here again. You kind of a recurring guest in the Bitcoin Season 2 podcast universe. But we're going to talk about the landscape. I'm going to use the term wrapped Bitcoin, but I think we're still kind of figuring out what the right term is. So for the CoinDesk listener, let's just start from the top with some basics. What does it mean to, finger quotes, wrap Bitcoin? And why do people do this?
Yeah. So it's kind of a controversial term, right? Because, just not every tissue is Kleenex.
Yeah.
But WBTC was the first popular wrapped Bitcoin product. And it's a custodial bridge. So what I mean is you send your Bitcoin to a counterparty and they give you a receipt on Ethereum and now a bunch of other chains that let you use that receipt in DeFi and for whatever. You can sell it, you can borrow against it. The term is controversial, not only because it's kind of like the brand, but also people are like, oh, well, the way that I use Bitcoin's not wrapped. Y'all, wrapped is not a technical term. and if you're doing anything with Bitcoin that's interesting, if you're doing anything that you think should use covenants or, it is wrapped. We're all waiting. We're all waiting on OpCat or we're all waiting on OpCTV. So most of the cool new stuff that we do with Bitcoin, either it's like a meta protocol, so it doesn't require a change on Bitcoin, or there are a few things that you can do, like what Lava does for loans. Very cool. But for the most part, if it's something new and it's in Bitcoin, there's wrapping somewhere and people just kind of try to maybe hide where.
So, let's talk about the different different types of wrapped Bitcoin. I'll maybe use this. I think one of the themes I'm trying to identify in Bitcoin season 2 is you have this whole like corporate treasury type of Bitcoin, which is on, MicroStrategy or like a BlackRock ETF. But
Yeah,
this,
that's one kind of wrapped Bitcoin.
yeah, it was this might be a good question to come back to. But like when I think about it, I'm thinking about like Bitcoin we kind of use in the on-chain, cross-chain ecosystem. Like what are the different, you mentioned this thing called bridging, you mentioned like different types of custodians. Can you elucidate a little bit like what this looks like or how different
Yeah.
versions work?
Yeah. Well, let's like go backward to go forward. So, back in the day when Lightning wasn't what it is today, and it didn't work yet, and we didn't have all the soft forks on Bitcoin for it to work. The idea with Lightning was it's a layer 2, and what that meant at the time is we meant that it extended Bitcoin with similar, relaxed but similar trust assumptions, and that it would let you use your Bitcoin faster. And there were ideas that would let you do other things, that would let you do things that your Bitcoin couldn't do normally. But we weren't really sure what all those things were. Fast forward to today, we've decided everything is an L2 or nothing is an L2. This whole idea of this layers and bridging, it's all complicated. I think there's a whole generation of Bitcoiners who think that, for all intents and purposes, Coinbase is an L2. So I think the way to look at this is like, look, we have this asset that's Bitcoin. It's pristine. It's fantastic collateral. We have this network that's the Bitcoin network. And from one perspective, it is an incredible marvel of engineering. It doesn't go down. It works. Some of the brightest minds in the world try to hack it. Nothing. From another perspective, it's very difficult to work with in newer systems. Extending it is quite difficult. None of us want our nodes to be hard to run. But you would call it kind of legacy code, brilliant legacy code, the same way that maybe some code bases are on airplanes. Not something you should rip out and throw away, but also kind of difficult to work with. So that's the position we find ourselves in. So as a user, I think you have Bitcoin, and whether it's in an exchange, so that's custodial, whether it's on your ledger, which is self-custody, or whether it's on another chain, which is, somehow it's bridged or somehow it's wrapped. Hopefully your experience is just that you're using Bitcoin. And I think, unfortunately, people have to kind of learn a little bit more than that today because not all these things are safe.
Let me tell you about one of the most slept on opportunities in crypto. Arch is building fast, composable DeFi apps on Bitcoin. Arch apps tap into the OG blockchain with by far the most liquidity and best brand in crypto. I've known the team for over a year. The tech they're building is solid, and they are racing towards mainnet. There's dexes like Saturn, meme coins on funkybit.fun, instant loans on Cha-Ching, and so much more. Plus, they're rewarding testnet users, so join me in trying out Arch while it's still early. And we will get into, as the episode goes on, we'll probably get deeper into some of the specifics, but could you describe to me like some of the trust assumptions people are making when they're using a couple of the predominant like wrapped Bitcoin products?
Yeah. So WBTC, which was kind of the OG, was a BitGo product for a long time, and the assumption was you were trusting BitGo's custody. There's a multi-sig, but BitGo does custody all the keys to the multi-sig, so it's not economically disparate parties. Collusion is trivial. Then the Bitcoin legally was held by a trust in the US. So it turns out like when you're a custodian, when you can count a number of custodians on one hand, the law really matters. And so the Bitcoin was held in the trust. So what does that mean? It means it's bankruptcy remote. So BitGo could go under, the trust would be fine. The Bitcoin would be legally unencumbered. But if someone found those key shares, the Bitcoin could be gone. And so late last year, BitGo actually made a change. So this is one of the things that we all have to understand about this. There's the model that we think we're getting into, and then there's, who can change the model? And so BitGo made a change. And originally, I think the idea was to, and I'm not them, so I can't speak for them, but I think the idea was to make it so that the US couldn't unilaterally freeze this money, right? That's me steelmanning what they did. Then what they did was pretty interesting. They took this 2 or 3 model and they said, I don't know if you guys are familiar with Justin Sun, but we think he would be a great key shareholder.
He's for the listener, he's the co-founder of the Tron DAO. One might say he is the Tron DAO. He's crypto's favorite bad boy, you might say.
He's a controversial figure. And I mean, regardless of how you feel about Justin, he has been involved with stablecoins where he took over and then the treasury was raided. And so, I can't say he did this or he did that. I know that some of these changes they eventually led to Coinbase, though, deciding to delist WBTC. And so that was salacious too. So there's all sorts of tea here, but yeah. So that's the idea. Is like ultimately though, there's a custodian or there's maybe two or three, and that's kind of the model that WBTC uses. Now, some of these other variants powering these chains do some things that are pretty different.
Yeah, so there's been a lot of shakeup in the past year. I mean, I had you on an episode I think last summer, kind of as some of the initial things are being moved and a lot of the repositioning. And it's been pretty interesting because I use our friends over at Bitcoin Layers, Giannis and Red, have a really good research product that show that if we're going to hand wave here, there's over 300,000 or so accounted for Bitcoin wrapped across chain. That's like,
we think.
We think.
they're doing their best to be sure.
Exactly. This is why I reference them, because it is a hard thing to track. But
it's really tough.
It
shouldn't be. It should be the easiest thing in the world, but the market has not made it easy.
Let's just get right into it. Why is it not easy, Matt? What are some of the hard things?
Well, let me talk about what we did in 2020, and then maybe use one of our products as sort of like a comparison to some of these other folks in the market. So we saw WBTC. We thought it was really cool. We wanted to see a more decentralized version. And so back in 2020, we launched something called TBTC. And TBTC, the first version, had a security model that was sort of like top-notch, didn't scale as well. And then the second version, which launched a little bit later, is more scalable, slightly relaxed security model. But the key that you need to remember for both of these, and really for almost any bridge model you're going to hear about until there's a soft fork in Bitcoin, is this idea of an honest majority. So the requirement is this. You have a bunch of people who are not you, who are custodying your Bitcoin for you. Are they honest? And so when people say an honest majority, they mean this system is secure if you assume that the majority is honest. So like if you point at a random group of people, like, I don't know, on the subway or something, and you're like, okay, here's like 9 people. If 5 of them agree, they can have my $1 million in this suitcase, and you put the suitcase down, but you tell them all, I really don't want you to take my money, and I don't give you permission, but you have the power. The question is like, will they take it? And for some groups of people, they will. For some groups of people, they won't. The bigger you make that number, the more difficult it is for them to collude. But also, like, the people you choose from really matter, right? If you choose a bunch of people that are high rep and highly respected, you're probably going to feel a lot better. And if you choose a bunch of people that for whatever reason you don't like or that wish you ill, you're probably not going to feel good about your money. So that's the core honesty assumption. And even in BitGo and WBTC, you see that. Well, it was an honest majority. It was 1 of 1 for BitGo. So is that an honest majority? And then it was 2 of 3. It's BitGo, Justin Sun's BitGlobal, and then another part of BitGo. So that's like this core idea that we need to keep in mind. But then you start looking at some of these other products. So when we shipped TBTC, we said, well, if we're doing this on chain and we're doing it maximally decentralized, it should have proof of reserves built in. It should be doing that at all times, every day. It should be really obvious to people where the Bitcoin is going. And so that's how it works. There's a page. It looks almost like a block explorer. There's tbtcscan.com.
You post addresses. We know who the signers are. And
you see the addresses. You know who the signers are.
There's the Bitcoin, and this is what they're doing with it. Yeah, it's like pretty clear.
Yeah,
it's great. So why do the Bitcoin Layers people have trouble figuring out how much Bitcoin is wrapped?
So I think that's table stakes. And to be clear, that's something that WBTC did very well. Like, that's something they also thought was table. Anyone who's done professional custody work, I think, would agree that like proof of reserves in this day and age is table stakes. But the thing to remember about proof of reserves is even when it's implemented perfectly, proof of reserves is never proof of solvency. So if you see proof of reserves, the thing that was interesting about what BitGo did with WBTC is they proved their reserves and they had a trust. So you knew that there wasn't a loan against the reserves. But then you look at TBTC and the threshold network, they proof reserves. Now, if they were all some company, you could imagine some legal setup where there's liability and actually there's a loan against the Bitcoin. Now, because you can see that they're all independent entities, okay, you're pretty sure that there's not a liability. So now we get to the really interesting spot of some of these new systems where a lot of them are excited about Bitcoin season 2, just like you, and I mean, just like me. And so there was a gold rush. And so we've seen all these systems grow very, very quickly. And a lot of them are using centralized custody, which is a trade-off. And if a user decides to do it, just like they decide to use an exchange, that's their right. But they made some exceptions around either they don't publish proof of reserves or, and this one's my favorite, they publish proof of reserves, but they actually do not require the underlying Bitcoin to be custodied. So I call this TVL mirroring. And it's a really fun, it was really, especially about a year ago, it was all the rage as this Bitcoin season 2 narrative started. And what people do is they say, hey, I want to launch a new product, a new Bitcoin product. I really want to show how big and important my product is. So I need to get a bunch of people to put their money at risk and show how they believe in me. But then the people with the money are like, I don't want to do that. Like, I do want to make money on you. And I do think that one day you might do something interesting, but not today. So here's what I'll do. I'll move the money to a wallet that I control, and you can tell everyone that you control it. And actually, it turns out, I don't want to call it an industry standard, but this became a very popular thing last year. So we're starting to see, like, if you're the Bitcoin Layers team, you're in a hard spot because now you're like, okay, people look like they've published proof of reserves, but a third party can move the funds without impacting the receipt token. So that's like if BitGo gave out WBTC and then whenever it wanted, it's like, I'm going to move like 5,000 Bitcoin, but just like, don't worry about it. You can see it on chain, but it's still there. So that's what's kind of going on right now.
Hey, this is Will with Blockspace Media. And I don't know if you heard, but we just announced the second edition of our conference series, Op Next, now to be held at the MicroStrategy HQ in Tysons, Virginia.
That's right. After the success of our first scaling conference at Fidelity last fall, we're doing it again this spring, April 11th and 12th at the MicroStrategy HQ. I'm really excited for the programming. We have various stakeholders, industry, developers, and Bitcoin miners present.
So join us in April for open, neutral, and honest conversation about the leading proposals and technical solutions that will scale Bitcoin to the next billion users. No booths, no tokens, no shills, just Bitcoin and honest conversation.
You can find tickets and more information at opnext.dev or click below in the show notes.
Yeah, this is really interesting. And so now we're looking at 327 or so. They're doing their best to figure out how much Bitcoin might this account for, which is $30 billion. And if we were to this is probably maybe the most accurate assumption we can make. Yeah, well, we could probably dig into it, but again, we'd have to get into the dirty weeds of some of the details. But this is a big economy, Matt. This is a $30 billion economy. Now, if we were to look at everybody likes to their moths to a flame to the MicroStrategy treasury. They love to see how much more money MicroStrategy or strategy now is going to yeet into Bitcoin. And but if you look at the other known private companies out there, and there are known private treasuries, now 327,000 Bitcoin actually rivals that of the Tesla plus.
I mean, it's approaching rivaling strategy itself, right?
Exactly.
It's a stone's throw. Yeah.
Which is really interesting because this brings up an interesting phenomenon. We're looking at the emergence of, I'm trying to make this narrative happen, but I would say it's the corporate treasury Bitcoin, the sovereign treasury Bitcoin versus the on-chain economy.
No,
Bitcoin.
It's real. Yeah. I actually think you can take it a step further. I think you can take the ETF and combine it with the corporate treasury Bitcoin, and you can kind of be like the illegally wrapped Bitcoin and the technically wrapped Bitcoin, Yeah. Because they let you do similar things. You can borrow against your legally wrapped Bitcoin. You can borrow against your technically wrapped Bitcoin. One requires a brokerage and KYC and this, that, and the other. One requires an understanding of nodes and a wallet.
So where do you think what do you think the role of this technically wrapped Bitcoin used across the crypto economy? What do you think the role of that is? Like,
Oh man, you're asking me for my bullish take, but
give
I'm
me a
gonna ask
real
myself.
opinion.
Yeah, I'm going to ask myself the question I want you to ask, and then let's come back to that.
Yeah.
And the question I want you to ask is, how much of that 300,000 BTC is real?
That's the question I want. Yeah. What do you think?
Yeah. I think that maybe max 60% of it is real. I'm struggling. And in terms of it, I mean, maybe a little higher if we just mean it exists at all, if that's our bar. But if our bar is at risk and actually backing the protocols, a little south of 50%.
Ooh, that is
rough.
I see. That feels to me like this feels to me like some of the egregious overextensions of last bull cycle to me. I mean, that seems like FTX ever had the Bitcoin to begin with, or is maybe there a middle ground of like?
Yeah, I mean, I think first I might be cutting a little too deep because I'm like doing the math in my head. I don't want to name offenders,
but it's not 90 is kind of what I hear. It's not 90.
Yeah, it's definitely not 90. Yeah, because I look at the WBTC appears to be there from the most recent proof of reserves, and I don't have a lot of reason. The next biggest pocket is probably Babylon, and so between those, you're like, okay, we got to cross 50%, but then it starts getting real touch and go. So.
Yeah, so let's go back to the original question what is the future? Let's just say, we're not going to concern ourselves with what the Bitcoin's real or not, but it is demanded across the crypto ecosystem. Does the world of technically wrapped on-chain, cross-chain Bitcoin, does it play a different role in the growth of our Bitcoin economy?
It does. Yeah, it for two reasons. So one, and I try to tell people this and they don't get it, especially, I mean, I'm engineer coded, so I struggle with this too. But new Bitcoiners today, they didn't buy on Coinbase or, we'll choose your favorite Fold or I don't know, not Swan River. They didn't buy any of these places. They bought the ETF or they bought Strategy. And so that's where our new holders are coming from. And so when you look at the funnel of I started an exchange and then I decided to self-custody and then I learned about Lightning, for example, or then I went to TBTC or WBTC. That's a pretty deep, gnarly hobbyist funnel. And the reason I'm so interested in this is because the value in that funnel accrues at the top and at the bottom, and the stuff in the middle, not really where you want to be. That's how I think of it as a startup guy. So the ETFs, that's a new layer. When we get in-kind redemptions, that layer will drop down from the ETF down to exchanges and other custodians. But right now, it's of its own. So all these people who have bought into the ETF, and definitely anyone who's bought into MicroStrategy, because that's not going to get in-kind redemptions, all those people, they don't have anywhere to go. So on the one hand, we're kind of bifurcating all these people, and all of the new users and all of the retail are coming from the traditional stock market in this cycle. So when people ask man, when my alt's going to go up, what's the beta to Bitcoin? And the answer is, well, why? Why would it when everything's on the stock market? It's not, you don't need some random Bitcoin clone. So that's one take, right? Is that the growth is with the TradFi, the legally wrapped side. How I feel though is long term, if that's all we built, it's not enough.
Yeah,
that's not success.
Yeah,
I'd be disappointed. Yeah, and so I think long term, we need to find a way to help these people to self custody. We need to make it easy. It's not easy today, and I love when someone else has been in the space for no, it's easy. It's gotten so much easier. It's not easy. Talk to your family that doesn't know what you do. Get them to just do a quick user test. It's not. So I think it's our challenge is going to be okay when we have in-kind redemptions turn on. Who's going to be ready to accept all that money and help it find its way to self-custody? And so I think that's the new funnel for Bitcoin users.
Well, this gets into how I kind of like to wrap most conversations up here, which is I take touch points on where people are on the topic of soft forks. You brought it up at the top. And one of the very simple pitches of some of these software proposals out there. If you're a CoinDesk listener, don't know what I'm talking about, this is something you'll have to listen to more episodes to learn more about. But for the maybe long time, more technical listener, like a lot of these software say they make the self-custody experience, they make the onboarding experience easier. They make the reason to touch Bitcoin more directly much more compelling. What are your thoughts on the soft fork discussion? Do you have opinions? How does this apply to your world?
Yeah. So I think I've got like a please do your homework opinion and my bags and my direction opinion. So the please do your homework opinion is like, look, if we don't scale self-custody, this was the most boring replacement to, money under your mattress. And we have truly sucked the joy and the interesting stuff out of Bitcoin. Like if we do not try to scale self-custody. And I think so much power and appreciation to the Lightning folks who've worked on this, but like we're not done. We need to be able to look at other things. We need ARC, we need UTXO sharing, we need all sorts of other approaches. That said, I have and to be clear, to do that in a trust minimized way, we do need a soft fork. So full stop. That said, I learned a long time ago not to build a company around changing Bitcoin. Like if you're going to choose one thing in the world that you want to change, it was easier for Elon to change the U.S. president than it is for him to change Bitcoin. It's not. It's when we say immutable, we mean it in a gnarly way as well as the way we all like. So I guess I would just say, like, for example, like Taproot Wizards, like ballsy. Raise the money, do the thing specifically to change Bitcoin. And you know what? They're cult builders. Maybe they will. But like for me, I'm like, the more we argue, the less likely Bitcoin is to change. Typically, that's the experience I've had in past cycles. So all that to say, look, if you are an individual or a miner or a holder, please signal for OTV or CTV, excuse me, or even CAT. I don't know. I actually don't care as long as we have a rough consensus. If you're a startup founder, though, you need to have a solution in the middle, because people want stuff today and they're all going to the ETFs. So like, get your act together,
Man, that's very well spoken, Matt. I feel like we had a very, very productive conversation in 25 minutes. Where do we take this? What are your last thoughts on this conversation?
Yeah, final thoughts. Look, what I'm working on, we were early to this Bitcoin bridging thing by 4 or 5 years. Sometimes being early is being wrong. Sometimes it's being early. I don't know. But where I'm at next is I want to see people be able to live off Bitcoin. And what that meant when I first got in this space in 2014 meant, sell it for gift cards. That's what Fold originally did. Today, that means taking out loans. So imagine if we can take out non-custodial loans against our BTC to live. So anyway, that's what I want people to be thinking about. That's what we're working on with Mezzo. It turns out that's also how I financed my house. So anyway, I'll save that story for maybe another time.
I feel like we should have talked about this before. I'm currently broadcasting from a house that I did a similar thing with. So shout out to all. It's a pain, but I'm also surprised that it can work. So, well, here's to the future of improving the Bitcoin onboarding and self-custody experience. Matt, thank you so much for coming on Bitcoin Season 2.
Thanks, Charlie.